Welcome to another Your Money Talks video cast. I'm Jerry Slusewitz. Today is September 13th, 2012. Again, big day. We were kind of anticipating this day for a while. Federal Reserve Chair Ben Bernanke and the Federal Open Market Committee announced QE infinity, quantitative easing, but from here to infinity, kind of like Buzz Lightyear, to infinity and beyond. Pretty amazing stuff. Basically, they said they're going to create money printing operations to keep interest rates low. They're going to buy mortgage-backed securities. They're going to sell short-term securities to buy long-term securities to try to stimulate the housing market. And they said if the economy starts to pick up, then we'll continue to print after it picks up just to make sure that it's a solid ground. If the market doesn't pick up, then we'll keep printing until it does pick up. So basically, they're going to just try to flood the system with liquidity, with cash. Similar to what Europe said last week, Thursday. Trichet and Draghi, I'm sorry, what was it, OMT, outright money transactions, or outright OMP, outright money purchase. So the same thing. They're going to be doing 3-year treasuries, but it's just on an unlimited scale of money printing. What does that mean? Well, it means that things that priced in US dollars should rise in value. We saw the market go up pretty steadily today. We had kind of a inverted formation in the market, an inverted head and shoulders, and we kind of broke out to the upside on that today. Looks like we'll probably continue going on. A lot of money managers are lagging the market. A lot of hedge funds are lagging the market. We're at the last month of the third quarter. They're going to need to show some returns, so there'll probably be some catch-up going in the next few weeks. I anticipate the market to continue its bullish trend. You know, there is some potential for a slight pullback because we have been trending up since June. But again, when I say slight pullback, I mean slight. There's a lot of dividend-paying investments out there. I think emerging market debt looks pretty attractive to me in this environment. You know, you might think, well, geez, this guy's risky. No, I'm not risky. It's the Western nations that have the debt. It's the developed countries in Europe that have all the debt. The emerging markets are much better financially than us in terms of their balance sheets. And as we devalue our money, that gives the opportunity for these other currencies to do very well. So I think there's a total return appreciation. You can get 5 to 6% income, and you can get upside appreciation as well. Some of our positions are doing extremely well. REITs continue to do well. Hard assets will do well. Gold, silver, commodities, copper, those things should do well. Basically, we're pretty bullish over here. The market did break out, like I said. And I think there's going to be some catch-up to be made by a lot of portfolio managers and a lot of individual investors. As I talk around town, I do a lot of public speaking. People are underinvested. People don't have enough investments in the market. So it's very, very important that you make sure you're positioned for success. Give me a call, 800-449-9501. My name is Jerry Slusewitz, host of this program, Your Money Talks. We're on the radio Monday through Friday in the greater San Diego and LA Inland Empire, where some can be heard here in Orange County as well. AM 1450 in San Diego, AM 1510 Inland Empire, LA, and Orange County. It's a weak signal in some of those places. You can go online at www.financialnewsandtalk.com. On the left-hand side, it says click here to listen to either 1410, 1510, or 1450. I'm sorry. Either one of those will work. If you want, sign up for a free email newsletter. Be glad to help you. I think that this is a very important time. It's not buy blindly, because you need to make sure you're positioned correctly. Some of the financial stocks did very well today because they're going to be buying this quantitative easing through bank assets. So that'll help them make more profits. You want to have that safety net underneath and ride the market up. At some point in time in the near future, we've got that fiscal cliff hanging out there after the election in January. That's a real problem. When they say fiscal cliff, they mean a cliff. The market could fall off. The economy could fall off. Obviously, the Fed's going to keep printing as much as possible, but that's artificial stimulus. It's not real growth. It's artificial, and for a while, that artificial stimulus will last. It's like giving kids a Coke or a bunch of candy. For a little while, they'll bounce around the room and then they'll come crashing down again, only harder. And that's probably what's going to happen with our markets. But right now, we're in that upward trajectory. Make sure you're positioned as well. Please give me a call, 800-449-9501. Sign up for our free email newsletter. and we'll be glad to get you on our distribution list. There's no obligation. The call is free. The review is free. And there's absolutely no obligation. I've been doing this almost 26 years, helping individuals just like you to become a better investor. Take advantage of that free, no obligation by calling today, 800-449-9501. Thank you.